Hi, I'm Neha Bhimshetty and my registration number is 19BC1123 and I'm doing this video on the topic anti-money laundering regulation. And the topics I'll be covering in this video lecture are what is anti-money laundering regulation and can money regulation laundering can be stopped, and the impact of anti-money laundering regulation on the payment flows. Firstly, what is anti-money laundering? And anti-money laundering, which AML refers to the laws and regulations and procedures intended to prevent the criminals from the disguising illegally obtained funds as the legitimate income. And anti-money laundering seeks to deter the criminals by making it harder for them to hide the ill-gotten money. Criminals use this money laundering to conceal their crimes and the money derived from them. AML regulations require financial institutions to monitor the customers' transactions and report on the suspicious financial activities. And anti-money laundering initiatives rose to global prominence in 1989 when a group of countries and organizations around the world formed the Financial Action Task Force, which is FATF. Its mission is to devise the international standards to prevent the money laundering and promote its implementation. And in October 2001, following the 9/11 terrorist attacks, the FATF expanded its mandate to include the combating terrorist financing. And the another important organization in this fight is against this money laundering is the International Monetary Fund, which is IMF. Like the FATF, the IMF also have pressed its member countries to comply with the international standards to thwart the terrorist financing. And the anti-money laundering laws and regulations target the criminal activities, including the market manipulations, a trade in illegal goods, and corruptions of the public funds and tax evasion, as well as the methods corruption of public funds and the tax evasion, as well as the methods used to conceal these crimes and the money derived from them. Criminals often launder the money they obtain through this illegal acts, such as the drug trafficking, so the funds cannot be easily tracked for them. So one of the common technique is to run the money through a legitimate cash-based business owned by the criminal organizations or its confederates. So the supposedly legitimate business deposits the money which the criminals can withdraw, and the money launderers may also sneak cash into the foreign countries to deposit and deposit small cash in smaller increments to avoid the arousing suspicion or use the illicit cash to buy other cash instruments. Launderers will sometimes launderers will sometimes invest the money using the dishonest brokers willing to ignore the rules in return for the larger commissions. One rule in this place is the AML holding period, which requires the deposits to remain in an account for a minimum of the 5 trading days. The holding period is intended to help in anti-money laundering and the risk management. Though the anti-money laundering laws cover limited range of transactions and criminal behavior, the implications are far reaching. For example, AML regulations require the banks and other financial institutions deposit that issue the credit or accept customer deposits to follow the rules that ensure they are not aiding money laundering. And can money laundering be stopped? Money laundering cannot be completely stopped because but it can be reduced through constant vigilance. The financial institutions can monitor the customer deposits and other transactions to ensure that they aren't a part of a money laundering scheme. The institutions must verify the origin of large sums, monitor suspicious activities, and also they report these cash transactions which are exceeding the $10,000. In addition to this, complying the AML laws, financial institutions must ensure that clients are aware of them. One rule in this place is holding the AML holding period, which requires deposit to remain in an account for 5 minimum trading days. This holding period is intended to help in holding the help of the anti-money laundering systems and the risk management. And the impact of anti-money laundering regulation on the payment flows. Regulatory pressure on international banks to fight money laundering and the terrorist financing increased substantially in the past decade. At the same time, there has been a rise in the number of complaints of banks denying the transactions or closing the accounts of the customers, either based on the high risk countries or attempting to send the money there, a process known as the de-risking. In this, we investigate the impact of increase in the regulatory uh, risk driven by the inclusion of countries of an internationally recognized list and of high risk jurisdictions on subsequent cross-border payments. We can find that many countries that have been added to a high risk gray list face up to a 10% decline in the number of cross-border payments received from other jurisdictions, but no change in the number of which are sent. So we also can say that a gray listed country is more likely to decline payment from other countries with weak AML or the CFT institutions. We can find that there are limited evidence that these effects manifest in cross-border trade or the other flows. Given that many countries that are placed on these lists tend to be poorer on average, these impacts are likely to be more strongly felt in the developing countries. And since the creation of this financial action task force in 1989, the anti-money laundering and the counter of the financing terrorism, which are the AML and CFT policy, has grown from a collection of national policies with a global design. And in more recent years, that the DISM has developed significantly more influence on the decisions that banks and governments around the world making. The concerning with the customers or the jurisdictions can be trusted and require further scrutiny. And the combination of large scale files and higher compliance costs and the international naming and shaming has anecdotally led many banks to withdraw from certain lines of business or the geographic areas to the potential detriment of cross-border economic activity. However, to date, this issue, the de-risking, has received little in the way of empirical analysis, making it difficult to know whether it has become a substantial problem or not. And the issues of the economic impact aside, these results on assessing both the effectiveness and the efficiency of the global AML or CFT regulatory regime. For those who aim it is not to fight to the flow of illicit money around the world without preventing illicit money from flowing, then there are several things to be alarmed about. Firstly, the reduction in the payments received by the countries subject to greater regulatory scrutiny rises the specter of the potential losses of these countries. Secondly, that there are either no effect or a positive effect of FATF grey listing on the number of payments, leaving a designated country suggests that increased scrutiny may not do much to prevent the illicit money from leaving high risk countries and entering the international financial system at large. And however, at present, the story appears to be more complex than the recent narratives have suggested. We do not find any evidence that these countries have frequently been mentioned as a source of de-risking or the source of pressure of the de-risk are the ones where there are substantial declines payment flows. And from gray listed countries, we find some results on a small degree of consolidation around the countries with strong AML and CFT acts institutions, which suggests that at least some of the increased payments are looking and making their way to the countries that are best suited to vet them. Thank you.